Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about Bitcoin, the beauty of mathematics, part 15. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. Let's go ahead and jump in. So on the first of every month, we do this update, and it's probably my favorite series to do. Now, while it's called Bitcoin, we're actually looking at the valuation of the entire cryptocurrency asset class, but Bitcoin does make up a decent amount of it. What we do during this series is we look at the overvaluation or undervaluation of the crypto asset class with respect to the fair value logarithmic regression trend line. We try to make some dubious speculations on what could theoretically happen, and we'll be taking a look at that in this video. Now, why do we talk about the beauty of mathematics? Well, the thinking that we had a year and a half ago or so was we see mathematics in nature all the time. And with Bitcoin, you have these halvings built in, you have so much built in to Bitcoin. And what we've seen so far are cycles that play out that are very distinct from one another, yet they all do carry some similarities. We have these boom and bust cycles, and the whole idea is, can we explain what's going on via mathematics? And so what we do is we take the white line here is the total cryptocurrency market capitalization. The red line is the logarithmic regression fair value trend line, which is fit to all of the data, right? It's not just the peaks, it's not just the bottoms, it's fit to all of the data. And as of September 1st, the total cryptocurrency market capitalization is coming in at a very modest 2.07 trillion, with the fair value logarithmic regression trend line coming in at a very humble 888 billion. This represents today an overvaluation of approximately 133%. Now, we can stay overvalued for years if history is any indication. We can also stay undervalued for years. And we're going to dig into just how overvalued or undervalued we could theoretically go. So, some of the ways that we can try to understand this market is just by looking at lines measuring from the bottom to the top. Now, this part is certainly not mathematical. We're just sort of looking at it more or less is trend angles, but again, trend angles are very dependent on the aspect ratio. So if you do try to do too much dubious speculation on trend angles, it can get you into trouble because, again, it does depend on the aspect ratio that you're using. But when we look at this and we propagate through from one cycle to another, what do we notice? Well, the moves are somewhat diminished, right? They're not going up as quickly and as crazy as they've done in the past. And that is an unfortunate side effect of a growing market capitalization, and it's something we will have to contend with. But regardless, what we can note is that we have not even gone up to the upper logarithmic regression trend line that's fit to the three prior peaks. Now, again, this peak fit to this regression line, these three peaks, it's only 3 data points. So to attempt to take something to the bank that's made up of only 3 data points is very dubious in and of itself. But I have it there as a general guide. You can see back in 2013, we came up to this sort of midpoint. We got rejected by it, and then we went up later on. Same thing over here. And we actually talked about this very distinct possibility quite frequently back in January, February, March, April, and May. We talked about the idea of getting rejected, having maybe a double peak cycle. For all we know, it could turn into a triple peak cycle. We really don't have enough knowledge of how the market's going to play out. We'll have to see. We'll have to take it 1 month at a time. Now, what you'll notice is that there were 3 prior peaks that are highlighted in red. We also have very distinct bottoms every single market cycle that we now have highlighted in green. And what I want to draw your attention to is the fact back in 2013, we sort of had this intermediate top that was not a market cycle peak, even though at the time you could have tried to argue that it was, and it's always possible that you could have been right, but history shows otherwise. So what we've noticed is Could this be an intermediate peak in the market cycle? Could it be an intermediate peak? And if it is an intermediate peak, then it could mean we have a long ways to go. If we peak on, say, the 4-year cycle, it would have us peaking more likely below $10 trillion for the entire asset class. If we peak in 2022, then we have a much higher probability of getting to 10 trillion. If we peak in, say, 2023, then we would probably be going over 10 trillion. The way I see it, time is on our side, because from here, if we go up quickly, then it means the market cycle peak is likely going to be lower, but still at elevated prices from the current day. If we go up a little bit slower and maybe have a few more corrections along the way, then I ultimately think we will be able to fly higher than if we ended up peaking this year. And if it takes even longer and we get another nasty shakeout similar to what we saw back in May, then again, the market cycle peak could be even further out. The dubious speculation, though, is that while I do believe we could always see moves back to the downside, I do not think we're going to spend any consequential time down in this region down here before a market cycle peak. Okay, we could always go down and flirt with lower levels, worst case scenario, short term. You never really know what's going to happen. But would we spend any consequential time down there? I really don't think so. So if we get anything like that, I would treat it as an opportunity and not as a reason to run for the hills. So when we talk about market cycle peaks and whatnot, we could speculate, hey, do we know exactly when it's going to happen? No. But if we update this here on the public YouTube channel once a month, then you can stay fairly up to date on where the asset class is. Are we getting close to the trend line? Are we not? Okay. What is the other reason that time is on our side? Well, remember, the fair value regression trend line is a monotonically increasing function. So as long as we stay with that, we should be generally going up. You can see that the fair value slowly increases as time goes on. So even outside of the grand scope of, say, a market cycle, even through an 80% loss in a bear market, I would still argue that time is ultimately on our side, even if we have to reaccumulate for 2 or 3 years before seeing new all-time highs. But regardless, also I'm speaking to this market cycle as well and saying that I do believe that time is on our side. Now, I don't know, again, the exact path we'll take to get to this region up here, but I would say it was probably going to be somewhere in this green box, if I had to guess. Somewhere in that green box should be the general path that we'll take to get to these levels. Again, if it ends up peaking in 2021, it'll probably come at a lower total market cap than if it came later on. Now, this is one of my favorite charts because what it shows is the percent difference between total crypto market capitalization, the white line, and then the fair value logarithmic regression trend line, which is the red line. And it's shifted by 100%, so 100% is the fair value, meaning when the white line is on the red line, it means you're at the fair value at that time. And what you'll notice from this chart, which you can also see from the other chart, is that you have these market cycle peaks highlighted in red. And we also notice that there could be these intermediate peaks that we have highlighted in yellow. We've talked about a lot of the similarities back in December, January, and February of the current market cycle and 2 market cycles ago. I would contend, as I've said for the last 2 years, that every market cycle will be different. We cannot expect them all to be the same. Even though there are a lot of similarities between this cycle and 2013, I would also point out that there are some differences. For instance, the time between some of these moves for this cycle are much more spread out than they were back in 2013. We can note that we came down here. We had a major move back up. A lot of you guys remember this move down here in the end of 2018, and then we came back up to the 2019 impulsive move, then back down, then back up to the fair value, and then one more capitulation before blast off. And then we put in an intermediate peak. This one was at 600%, this one was at around 400%. And what you'll notice is after that intermediate peak, we had a retracement back down to this region, which is what we had been discussing for several months. If you remember, back in April, March, April, and May, a lot of people were calling for a 300K Bitcoin by September. Well, my friends, it's now September, and I hate to break it to you, but Bitcoin's not at $300,000. So, what gave us the idea that, hey guys, we're in fact going to have at the very least a summer lull? I said expect a 3 to 6 month downtime in the market. We had 3 months. Will we get another 3 months? I don't know yet. I think we need a couple more months, and we'll see if we can hold the 20-week moving average. And if we can, then we're off to the races. And if we can't, I just think we kick the can down the road 3 more months. We have 3 more months of accumulation, and then we blast off. So this played out fairly well. And you might say, well, Ben, this is hindsight. Again, these are things we discussed at length, okay? And so the most bullish case would probably be the 4-year cycle case, saying that we're just going to go put in a market cycle peak at the end of 2021. Okay, at the end of 2021, where Bitcoin's going to go to its massive blow off top, and then it might even bleed into the first couple of weeks of 2022 if the altcoins are making their final moves. This would say, and I would say this would be the most short-term bullish case, which basically would mean we can only go up from here, more or less, would just be up for the next 3 or 4 months if you think that we're going to peak in December. But again, some of these things we've talked about, we've looked at in the past. This is a snapshot from the Beauty of Mathematics video back in May. And we talked about the fact that we had 9 2-month candles in a row that were green. 9. 1, 2, 3, 4, 5, 6, 7, 8, 9. 1, 2, 3, 4, 5, 6, 7, 8, 9. And I said, hey guys, seems like we're ahead of schedule. I showed you guys the Bitcoin risk metric that was flashing extreme sell back earlier this year, back in March and April. And when we looked at this, we said, okay, expect a summer lull. At the very least, expect a summer lull. And since then, you'll notice that we did get that red candle, right? We did get that red candle if we update it. So we went from here to here, okay? So there are some differences, okay? The main difference that I can see so far from these 2-month candles are that this one here, so we came up, and then the one that took us down, following that, we just had another one that took us right back up to the top. This 2-month candle that took us down only took us down a small fraction of the move we had seen in the prior 2-month candle, and then the following one just got us back up to the top. This one's been a little bit different, as the red candle has taken us far below where the prior 2-month candle started, and then the 2-month candle following it has not actually made it back up to that level. For it to get back up to that level, we'd probably be looking closer to a $58,000 to $60,000 Bitcoin, somewhere in that area. But again, we're not at that point yet. So there are some things that are still lagging behind, but it's still generally the same thing, right? So a lot of misconceptions, I think, are that, hey guys, this is exactly 2013. But remember, if this had been 2013, Bitcoin would have already gone to $2 million several months ago, like a long time ago, because the 2013 cycle was relatively short. That double peak cycle was relatively short. That's just something to keep in mind, right? It's something to keep in mind, and that there are a lot of similarities between it, but it's expanded, right? Everything's expanded out. So when we go look at this chart, remember this chart, we said, well, hey, the market cycle peak here in relation to the intermediate peak of the following cycle is about 1/3. So this is about 1/3 of this one in terms of overvaluation. And then I speculated back earlier in the year, well, what if we get another 1/3 move, which put it around 400% or so? And it actually came out pretty close, and then our retracement so far has actually been really remarkably similar. And if you go back and look, if you don't believe me, just go back and look. This is March of 2021. This is before we had this retracement. I drew the yellow line in here. You can kind of see one of the things I envisioned here. If you go back even further to February, before we had even made it up that far, we were speculating on something like that happening. And then if you go back to January, we were speculating on something similar to that happening, where we go up and then we have a pretty nasty retracement similar to what we saw over here, and then we put in a market cycle peak later on. Okay, so when we look at this, if we were to look at it extremely closely, we would note that after this impulsive bounce that came, we actually did come back down a little, okay, before blasting off. And here we actually haven't done that yet. We haven't had that final pullback. So I don't really know if we're going to get a pullback in September. I mean, obviously the data suggests that Septembers are not really that popular with Bitcoin. Again, this September could be entirely different. And even with that said, even in the event that we start to go parabolic sooner rather than later, I would doubt that it would keep pace with this move. You can see the slope of this line here is actually steeper than the slope of this one over here. And so this second one is probably also going to be steeper than any theoretical second impulsive move from this market cycle. So again, could we make it to the to the downtrend lined up here by the end of the year? We could. In order to do so, we would basically need to keep moving up at the same rate we've been moving up, with maybe a few weeks here and there of slight corrections and whatnot, similar to what we had back from, say, like October of 2020 through April of 2021, but on an accelerated time frame. Okay, we would just have to go straight up for the next few months and not really spend too much time consolidating or anything like that. So it's certainly possible. And while I would lean to say it's not likely going to happen that we make it to the upper trend line this year, it is possible, and we will let you know if it happens. And if it does happen this year, then my speculation would be that it probably is the market cycle peak if we make it there this year. I think it's more likely to make it there not in 2021, maybe 2022, I think is more likely to make it to that level. And if not in 2022, 2023. But I feel like there is a high probability at this point that we make it to that level in 2022, and is where we're going to be looking over the next several months as we hopefully make our way there, with likely some bumps and shakeouts along the way. This is always things people don't like. Even remember the move to 42K early on. We had that major pullback back to the 29K area. And it was like a 30% pullback, and we spent about a month just recovering before we could trend higher. So remember that those phases do exist in the market, and we will likely see them play out again in the future. Something we can do, very dubious speculation of course, is we can look at the time ratio between this first peak and the intermediate peak and then the final peak. This was 672 days to 235. This was 1211. So the time between market cycle peak and intermediate peak over here was almost double the time it was in 2013. So in this move in the current cycle was almost double the time. The second impulsive move happened in only 235 days. So again, I know a lot of people are saying, hey, we're just going to go up at the end of the year and put in our market cycle peak in say December. And it is possible, right? I mean, I don't want to say it's not possible, because anything is possible in crypto. If you start saying things are impossible, then you can get yourself into trouble. So I will contend that it is possible that it happens. But what's more likely is we continue to see an exaggerated version of the 2013 cycle, where it continues to lag behind. And it still goes up, generally speaking, but it takes us longer to reach that final peak. And ultimately could take us, according to this model, July of 2022. Now, we'll have to see how things look by December. Again, that's the beauty of it. That's the beauty of the mathematical part. I mean, if we're already up here by December, then this analysis goes out the window. But if we're hanging out, somewhere over here in this area, then it still stands to reason that 2022 or even maybe 2023, if the cycle extends even longer, are still viable options. Okay, they're still viable options. And at this point, I think it's fair to say they're still viable options because we still have a significant ways to go. We are currently overvalued by about, as I said at the beginning of the video, maybe 133% or so. But we can see that the cycle peak, the market cycle peak, should probably be closer to 600% overvaluation. So it does seem like there's a decent amount of room for us to move up over the next 1 to 2 years or so. Okay, so I mean, again, it could come in a few months if the market just goes absolutely crazy in the next few months, but we will want to reserve that idea in our head that the likelihood that it extends out is highly probable. And if we look at theoretical future cycle peaks, I think that the overvaluation, the trend line here is decreasing. So you might say, well, wouldn't it make sense to happen sooner so we get a higher overvaluation? No, because remember, the fair value regression trend line is monotonically increasing, and it's increasing faster than this trend line down here is decreasing. So even though this might be, say, 500% overvaluation as opposed to 700%, the fair value out in 2023 will be actually much higher than it is today. So you're comparing a multiple from a higher base value than you would be today, because again, today the fair value is only a modest 888 billion. So remember, at the end of the day, I do believe that the market cycle peak will be approximately $10 trillion plus or minus a few trillion. Plus or minus a few trillion. And I don't know if it's going to be on the lower end or the higher end. I would contend that it's going to be on the lower end if it's in 2021, probably somewhere in the middle if it's 2022, and then maybe on the higher end if it's 2023. But again, $10 trillion plus or minus a few $trillion. And as we always say, as we drift off into dreamland every single night, what's a few $1 trillion among friends? Thank you guys for tuning in. Make sure you subscribe to the channel, give the video a thumbs up, click the bell icon to turn on your notifications, and I will see you next time. Bye.